Okay, students, before I begin discussion of Chapter 21 on the statement of cash flows, just want to remind you of a few things. Number one, you should be through Chapter 13. You should be paying attention to when these homework assignments are due. And we're starting Chapter 21 on the week of the 20th. The exam 3, will come up on April 27th, and like the last exam, you'll be required to take it during your scheduled class time. Unlike last time, I don't expect to give you as much time. I gave you 3 times as long as it took me to do it. I will shorten that down to no more than double the time it takes me to do it, so, or thereabouts. So if it takes me, like last time, it took me between 26 and 27 minutes, so I gave you 80 minutes. This time, if it takes me that, I'll give you somewhere between 55 minutes and an hour, somewhere in there. Also, after the first or the second exam, the last exam, I hadn't decided whether I was going to grade you on a percentage or on points, and I told you from the beginning it would be based on points, and I'm going to stay with that. So it will be on the number of points. So the grades were very good. I'm going to shorten the time, so I don't want y'all to have time to look everything up, so you don't think you have to know the material. It's very important that you know this material. I stressed that after the last exam. So I want to give you enough time to work it if you're proficient at it, but not enough time to look everything up that you don't know. So you need to prepare hard for that exam. The drop date has been extended till May 1st. So our exam is coming up, notice, on April 27th. So you will have the third exam as well, your grade on it, to before you have to decide whether to drop the class or not. So that's good information for you to have. Make sure you're getting your homework and Learn Smart points. I cannot stress how important that is. And then don't forget, we do have a comprehensive final exam in here that's scheduled from the beginning. And again, you will have to take that during the time allotted for your class, and I will decide how long I'll give you for that exam. I'm planning to do your exams on Connect as the last one was. That seems to work well. It's a platform you're familiar with, and so that's it kind of eliminates a lot of problems. You don't have to get special passwords. You're not dealing with some software you're not familiar with. You don't have to download anything. Just solves a lot of problems. So with all that, let's move on to Chapter 21 on the statement of cash flows. Now, remember, we talked about this earlier in the class. The purpose of accounting is to provide information that's useful for decision makers. Now, right here, they make a good statement that you need to also remember the objective of financial reporting, not accounting, but the objective of financial reporting is to provide investors and creditors with useful information, primarily in the form of financial statements. Now, statement of cash flows is the newest of the statements that we provide. It came about as a result of, I think it was a Statement of Financial Accounting Standards number 95 in the late 80s. I believe it was 1988 was the year that companies had to start providing it. Now, purpose of the Statement of Cash Flows was to, as they say here, fill a gap, an information gap that was left by the other statements. It provides information instead of on an accrual basis, on a cash basis. So it allows you to see not necessarily how much net income you had, you get that from the income statement, but to look at net income and see what its effect on net cash flow from operating activities is. So we'll get into that a little bit more later. Here they talk about the three types of activities listed on the statement of cash flows: operating activities, investing activities, and financing activities. Okay, so statement of cash flows, cash continually flows in and out of active businesses. And so we have these three types of activities, and here is kind of a breakdown of what goes into each type of activity. So the way the FASB defined it in FAS 95 was they talked about investing activities, and investing activities center around transactions involving long-term assets. So sale of property, plant, and equipment and intangible assets, the cash that flows in, not the gain or loss, the cash that flows in. So if we buy an investment, a long-term investment for $1 million, and we sell it 5 years later for $2 million, then our cash flow from investing activities when we bought it is an outflow down here of $1 million to purchase that investment. And then our cash inflow when we sell it is $2 million cash inflow from selling it. Now the gain obviously is the difference between what we paid for it and what we sold it for. So 2 million minus 1 million would give us a $1 million gain. That gain would show up in net income, but it is not a cash flow from operating activities. The cash flow was the $2 million receipt of cash from selling the investment, which is an investing activity. Also, sales of investments in securities and collections of loans. Now it says sale of investments in securities. That's what I was talking about. We go out and buy stock in some other company. We go out and buy bonds from some other company. Those are long-term investments, and we sell those. Then that is a cash inflow from investing activities. When we purchase those investments, then that's a cash outflow from investing activities. So cash outflows from investing activities are purchases of property, plant, and equipment, intangible assets, investments, or loans that we make to others. Okay? Now, financing activities center around transactions with long-term liabilities and with owners. In other words, with our own equities. Now, and by the way, that's an E, not a C there. So, but if we issue stock, issue our own stock, or we issue bonds to raise money, then we sign a note with the bank to borrow money. Those are all cash inflows. Excuse me, cash inflows from financing activities. Now, if we pay back a loan that we money we had borrowed, that repayment of debt, principal only, is a financing activity. If we repurchase stock, we purchase treasury stock, for example, that is a cash outflow for a financing activity. Payment of dividends is also outflow of cash from financing activities. That's a transaction with owners. Now, payment of interest is an operating activity. Also, receipt of interest on loans we make to others is an operating activity. But the actual paying of the loan or collecting of the loan is an investing activity. So you got to keep that straight. Just as over here If we issue bonds or we issue notes, that's a cash inflow from financing activities. Whenever we pay interest on those bonds or on that note, that's an operating activity. When we pay back the principal, that's a financing activity. So kind of complicated it sometimes, but once you get it down, you will understand it. You'll be fine, but you have to put in the work and the practice. Remember, we've talked about that over and over. Practice, practice, practice. Just can't do it enough, but that's what it's going to take to keep all of this straight. Okay, structure of the statement of cash flows. Again, they get into here the three types of activities, the operating activities, investing activities, and financing activities. They get into a little more detail here. Now, there is also a section that's technically not part of the statement of cash flows, but it can be listed on the statement or it can be listed as a supplemental disclosure, but it is non-cash investing and financing activities. Those have to be disclosed. So we'll talk about those later. This talks about in the financial accounting concepts statements. Statement number 1, before the statement of cash flows existed, did state that the need for an explanation of cash flows was really important. And in business, you often hear the term cash is king. Many businesses go into bankruptcy because they're unable to generate sufficient cash. Definition of bankruptcy is not that your debts are greater than your assets. There are a lot of companies with debts greater than their assets that survive. The definition of bankruptcy is not being able to pay your bills when they come due. It's literally a lack of cash flow. Now, down here, you see an example of statement of cash flows. Now, when you're presenting cash flows from operating activities, there are two methods. The direct method, which is presented here, and the indirect method. Now, with the direct method, we come in, and if you stop and think about the income statement, we would say, net sales. Here, we don't say net sales. We say cash inflows from customers. Now, are net sales and cash inflows from customers the same amount? The answer is no. Not necessarily. They could be, but quite often they're not. Now, what's an example where they're not? Well, let's say we're a new startup business. And so we have 0 in accounts receivable at the beginning of the year. And then we have $10 million in sales. And at the end of the year, we have $1 million in accounts receivable. Well, how much did we collect from customers? I think you can all see that the answer is $9 million. We had $10 million in sales, but we still have $1 million that we haven't collected from customers, and that's what we call accounts receivable. So you actually have to do some calculations to come up with these numbers. They're not just something you can capture directly from the financial statements. We have to look at accounts like sales and then see what other accounts are involved. We get down here, payment to suppliers of goods. Now you may think, oh, that's talking about cost of goods sold. Well, it is, but there are two other accounts that factor in there. One is inventory, and what the reason it factors in is if let's say inventory goes down during the year. That means cost of goods sold was more than the amount we paid for buying goods this year. And then accounts payable. If accounts payable goes down, it means we paid for more goods than we actually bought this year. Okay, I'm going to stop there. The time is just about to end for this video, so I will pick up in just a few minutes.